30-year mortgage rates are close to their lowest level in 3 years, and they were down week to week in the latest measurement. Joining us right now for an in-depth look at the housing market is Jay Farner. He's Quicken Loans CEO. And Jay, it's great to see you this morning.
Hey, good morning. Thanks for having me.
Let's talk a little bit about what you're seeing in the mortgage market right now. Rates are lower. Does that instantaneously drive up demand?
Yeah, demand's been great for the last 3 weeks and continues to be strong, both on the refinance side, but also on the purchase side. I think the thought that the inventory is low combined with low rates, we're seeing more purchase interest in January than probably any year in the past.
Why do you think that is?
Well, like I said, a lot of people out looking for homes. Inventory is pretty low, so people need a full-blown approval, and so people are visiting our website, calling in. I think realtors are encouraging that as well. People are getting a jump on home buying this spring. What used to happen in March now looks like it's happening in January and February.
You know, we teased going to break that we would talk about the coronavirus impact on the housing market. I had to think about that for a minute. I guess the impact is coronavirus concerns about what that means for the global economy and what could happen next have driven down interest rates. You saw the 10-year below 1.6% again pretty handily since the beginning of the week on this. Is that the link between the two? I can't imagine another one.
Yeah, I think even coming into the year before the virus, we saw some uncertainty as we're going into an election year, and so rates were already kind of on their way down. But with the concerns now in China and now here across the entire world, I think you're 100% right. I think that's caused more uncertainty, and as you know, that drives money into the Treasury, which is, I guess, on the bright side, beneficial for mortgage interest rates. Also, coming out of the holidays, people typically take a look at their finances, look at the debt that they've accumulated over the holidays, and that also tends to drive up interest. So those two things combined are probably leading to the record high traffic that we're having.
I know it's hard and that markets vary depending on geography, depending on price in different places. But would you say right now it's pretty much a seller's market?
Absolutely a seller's market. And some of those things that in the past we've seen from a geographic perspective are changing. So even in places where there's snow on the ground or it's colder, you're seeing activity much stronger. Here in the Midwest in particular, people are out looking for homes, thinking about buying. So that's a new trend this year. Every year it's kind of moved forward from April to March and then March into February. But like I mentioned before, people getting full-blown approvals with Rocket Mortgage have been really at record highs now.
You guys have a really good feel for what's happening just about everywhere in the country. We've been trying to figure out if the change in SALT deductions has impacted some of the blue states, like housing prices, let's say, in New Jersey, in New York, in Connecticut, in California. Have you seen that overall?
No, we really haven't seen that, and I think that comes down to the root of owning a home, and that's really more about the emotion of that place that you're living and how you're raising your family, et cetera. So we've not seen any change at all in interest levels in those states.
Let's talk about the Rocket Mortgage and the partnership you guys are doing with the NFL and the Super Bowl ads that you'll be placing there as well. Not cheap. Why is that a marketing plan that you think works?
Yeah, well, this year we're super excited. This is our third time with a commercial at the Super Bowl. This year we comboed it up with the Squares initiative. So we've got a partnership with the NFL. We're the official mortgage provider for the NFL. And so working with them, we've kind of added this extra excitement where people have gone and millions of people have signed up for the Squares now. So they'll be watching the game. Every single time a team scores, we'll be pulling numbers and names, and someone's going to win $50,000. At halftime, a person will win $500,000, and then at the end of the game, someone will win $500,000. So when we look at marketing, the opportunity to reach hundreds of millions of people, there's very few events like that across the year where you can accomplish that mission. And so the Super Bowl allows us to do that. And now this year with Jason Momoa, we've got a whole nother level of excitement. I think I heard today 7 or 8 million people have viewed the teaser videos that are out there with him. So it should be a big Super Bowl for us. You
guys spend a lot on marketing. It reminds me a little bit of Geico. They spend a lot on marketing too, but they obviously it works for them. They get lots of customer acquisition for all of that. I'm assuming it's the same story with you.
Yeah, actually, if you think back a few years, we partnered with Warren Buffett on the $1 billion bracket, and he introduced us to some of the folks at Geico, and we talked about the great success that they've had. And when you have a centralized operation the way that we do, the marketing becomes very, very important to get the brand out, to let people know that there's a different way to get a mortgage, a better way to get a mortgage through our process. And so we've studied some of the other great companies out there and kind of taken different suggestions from them, and so far it's working very well.